I would say 70 or roughly 70% of our time is actually dedicated to the first part of this equation that I just mentioned. So basically executing, proactively seeking opportunities in the market while also being very close to market agents to feel the market and to sound the market and understand whether or not there are any interesting opportunities out there. And then I would say that the remaining 30% is actually related to the corporate development part. So conducting, coordinating strategy projects throughout the group, challenging the day-to-day business of different business units, and ultimately interacting with all the stakeholders throughout the group.
Hello everyone, welcome to another episode of our podcast Crunch the Numbers. My name is João Metrena and I'm an equity research analyst here at Lisbon Investment Society. Today we'll be diving into the topic of mergers and acquisitions with our guest Diogo Bonsosa, who works at EDP in the Department of Investment Analysis, more specifically in the mergers and acquisitions team. Welcome Diogo, it's a pleasure to have you here with us today.
Hi João, thank you so much for having me here. Well, it's a pleasure to be here, and hopefully I'll be able to share some interesting thoughts on M&A as a whole and on its role here at EDP.
For sure. First of all, before diving into the questions, I'd like to give a very special thanks, of course, to you and also to Filipe Fernandes at the People Experience Unit and EDP as a whole for showing interest and availability to record this podcast here with us at Lisbon Investment Society. As an EDP ambassador and a Lisbon Investment Society member, it really makes me very happy to see both of these parts of my life working together. Now, the viewers, of course, want to know more about you. So please tell me a little bit about yourself and your background, of course, and how you ended up working in this M&A area.
Sure. I've been working for EDP for the past 3.5 years. I started as an intern in a very operational area of EDP, responsible for managing the collections process of the group, namely related to the retail side of the business at a company that at the time called EDP Soluções Comerciais, which was shared services of the group. I stayed there for roughly 8 months, and then I was offered a position at EDP Comercial, which is, as most of you know, the retail arm of the group. At a very interesting project responsible for setting up retail operations across Europe, namely in Italy and Poland. Well, I've worked with the team there for 1.5 years, and then I had this great opportunity to join the corporate center of the group and directly assisting the CEO in his daily activities, also with his chief of staff. I stayed there for another 6 months, and then that's when I had the opportunity to join the M&A and corporate development team, which is actually where I am today, and I've worked there for over 1 year. So as you can see, I've moved around quite a lot throughout the group, but I think it's quite useful because it ultimately provided me with a very holistic, comprehensive view of the group's business units, but also of the different business models that we pursue in the different parts of the value chain. So it's been so far a very rewarding experience at EDP.
Of course. What about your academic background?
I've worked at. I've conducted my bachelor degree in management, and then my master's degree in finance, both at Nova School of Business and Economics in Lisbon.
Okay, thank you. I think it's very interesting that you didn't start out in a finance-related area and ended up working in M&A.
Yeah, I think I did the other way around, right? So I
Yeah,
started off in not in a finance department, and I ended up in M&A. So I think
yeah,
people usually do it the other way around.
yeah, for
But it
sure.
worked. It worked just fine for me.
Of course, of course. Okay, so moving on to the next question. Usually people associate M&A analysts with valuation. It's the first thing that comes to mind, right? But as I know, it's not the only task an M&A analyst has to do, and it's actually a very demanding job that has a lot of areas of expertise that you have to master. So I'd like to ask you, what is the usual routine of an M&A analyst? What kind of tasks are involved in your day-to-day?
I mean, first of all, I think it's also useful to differentiate between EDP as a company and other companies that usually have very robust M&A departments. So I think EDP, as you know, although M&A has been a core part of our strategy and ultimately has led us to where we are today, we are not a hedge fund or private equity, and in that sense, I
Of
believe that
course.
the M&A role at EDP it's quite um, different from what you would expect at a company such as a private equity or a hedge fund. I would say that our mission here at the M&A and corporate development team is mainly to support the strategic development of EDP on the one hand, then also to explore and execute very, interesting, obviously, business opportunities, but also to optimize at all moments in time in this portfolio. So I think it's a quite comprehensive job that we have to do. I would say 70 or roughly 70% of our time is actually dedicated to the first part of this equation that I just mentioned. So basically executing, proactively seeking opportunities in the market while also being very close to market agents to feel the market and to sound the market and understand whether or not there are any interesting opportunities out there. And then I would say that the remaining 30% is actually related to the corporate development part. So conducting, coordinating strategy projects throughout the group, challenging the day-to-day business of different business units, and ultimately interacting with all the stakeholders throughout the group, namely the general and supervisory board, the executive board of directors, the investment committee. We also engage weekly with several advisors, banks, that also allows us and allow us to feel the market and understand whether or not we could potentially engage in some specific movements out there. And then obviously we also interact daily with different business units. So I think that in a nutshell, this is pretty much it. And as you mentioned, it's quite comprehensive.
Yeah, for sure.
And obviously, but again, it obviously is different from what you would expect at a very specific M&A company, such as M&A focused company such as a
Yeah.
hedge fund. But in the end, well, it obviously has obvious similarities as well.
Yeah, of course. It's quite interesting to see the M&A side from the point of view of a firm that isn't a financial institution, and it's more like a support to grow, for sure. So EDP recently finished a very big acquisition of Viesgo, as you know. Could you tell me what were the biggest concerns and the main points of focus when doing an operation of this scale? How crucial is the process of due diligence, which I know is very important and sometimes was overlooked in some historic transactions and didn't go very well. And finally, how did you decide the type of offer and financing, since there are a lot of options?
I think the Viesgo acquisition is actually a quite good example of the 70% that I mentioned earlier, in which we actively sound the market and try to seek interesting business opportunities out there. In this case, we secured a bilateral agreement with a long-term partnership with, in this case, with the seller, which was Macquarie, in a very interesting transaction with significant synergetic value. So in the end, we had a grid in the north of Spain, which was basically very close by with two grids that belong to Viesgo. In that sense, we believe that there were clear synergies there to be captured, which is why this was a very opportunistic deal for EDP. This was, as you know, conducted through the second half of 2020. So in the midst of the COVID pandemic, which was obviously a setback in the preparation of all the deal and the negotiations and the due diligence, as well as you mentioned, the management presentations, the rights issue launch that we conducted as well. So all of these parts of the usual M&A transaction were actually conducted remotely, which was something that we were not, the whole world basically was not as used to as we are today. In that sense, I would say that this was basically the main concern. So to make sure that the deal was kept alive and that we were able to thoroughly conduct this preparation process, which involved also internal approvals and external approvals as well, to make sure that we were in place to close the transaction by the end of the year. Obviously, there was also a very challenging part, which was the part of the financing, as you mentioned. We launched the rights issue to finance or to partially finance this transaction. So we were, to some extent, dependent on market conditions, which significantly deteriorated as the COVID period as well. We were somehow dealing with these two challenges. On the one hand, making sure that the deal was still, was actually going through the normal, thorough approval process, and also through the DD process and all these stages that the usual M&A transaction has to go through, hand in hand with monitoring quite thoroughly as well the market conditions, whether or not we would be able to execute the rights issue. So I think that these two dimensions were actually the main focus point here with the Viesgo transaction. As I mentioned as well, we conducted a very thorough due diligence process. So usually, as in every transaction, we conducted a legal, finance, tax, regulatory, markets, technical due diligence process. So we select advisors. They help us in analyzing all the information that the seller provides us, ultimately for us to be comfortable with the organization, the structure, the teams, the assets, and the overall perimeter that we are acquiring. And on the other hand, making sure that we implement or we adjust whatever adjustments we feel that are necessary to optimize the overall deal structure. I think on the other hand, as I mentioned, and following the rights issue, we also conducted a DD process with the underwriting bank. So in the end, we were conducting a due diligence process while we had, and we were also providing information to third parties to due diligence us as underwriting bank. So it was also quite peculiar. But yeah, so in the end, the due diligence process, as you mentioned, is critical in transaction, specifically in a transaction of 2.7 billion as this one.
Yeah.
The overall process took us. Yeah, it was quite significant for us. The overall process took us roughly over 6 months until signing, and another 6 months until closing, which occurred in December 2020. I mean, I think I already answered partially your question regarding the structure of the transaction and the financing. We issued basically a capital increase, so we issued and raised equity to fund part of the transaction. This is namely related to the fact that EDP had committed in its strategic plan for 2019-2022 to a deleverage path, and therefore we were committed to deliver on that trajectory. And therefore, we raised equity rather than other types of finance.
Okay. Thank you, Duke. It's really interesting to see how much work and how many areas are included in an M&A transaction and how complex it really is. It must have been really a challenge, a great challenge to do this in a pandemic, for sure.
Sure. There were a lot of moving parts, and the main challenge was to make sure that we were on all of them.
Of course. Okay. So as we know, we all learn models to value firms here in our degrees. Could you briefly explain how to value a firm that is an acquisition target? What models do you use? Was it what you learned when doing your degrees, basically?
I think it's. I didn't know, but I quickly realized that it's quite similar to what we learned at college. So basically, and very theoretically, there are three main valuation tools that we usually use: the DCF, the discounted cash flows, the DDM, and also comparable multiples. Obviously, the right tool will depend on the industry and on the target, and so I think there's no silver bullet there. I can say that at EDP we most frequently rely on the DCF. So basically, you start from the target's three statements, which you then extend and forecast for any foreseeable future that you assume, based obviously on historical information. There you derive the cash flows of the target and you discount them at your own predefined rate of return. Usually we use the WACC with a premium, basically to account for the time value of money. And then you discount those to the present, and you end up with a discounted free cash flow to firm. Then you need to account also for the terminal value of the company. So once you have estimated all the cash flows, you need usually also estimate what would be the value of the company on a perpetual basis and beyond your forecasted period. Then you also discount the terminal value to the present, and you obtain the enterprise value. Then you have to bridge it and to adjust it with whatever adjustments that you need to do to end up with the equity value. And that's actually the part that you end up acquiring when conducting an M&A transaction. So in a nutshell, this will be the process, which I believe is fairly similar to what you learn in college.
Yeah, it is very similar indeed, and it's very cool to see that what we learn in our degrees and obviously what we put into practice here in Lisbon Investment Society is actually close to how things go in practice in big firms today. Very cool. Okay, so now I'd like to know a little bit about hostile versus friendly takeovers. What are the biggest differences in the process of a hostile or a friendly takeover, and which type have you encountered the most while working in M&A, which is the most common?
Again, conceptually, what differentiates a friendly takeover from a hostile takeover is whether or not you have the support from the company that you're actually acquiring, whether or not you have the support from the executive board of directors of the target company. Um, as far as EDP is concerned, EDP was and EDPR consequently were the target of a tender offer from its main shareholder in 2018. Its main shareholder was at the time CTG. As usually occurs in this situation, the board has to issue an opinion or recommendation on whether the offer seems or not actionable. And as was our duty here at EDP, we conducted a very thorough and very extensive analysis on the conditions of the offer itself, namely on the regulatory process, on the price as well, on potential concerns and potential remedies that could be triggered with the offer, which is very common in a takeover of this size. So again, we assessed all these specific components. We issued a very comprehensive analysis, and then we shared it obviously with the board of directors and with the general and supervisory board. Well, in this specific case, and despite the merits of the offer, the board of EDP considered that on the one hand, the price that was offered was not aligned with previous transactions of this kind, which was actually seeking control of the company, and as such, it did not adequately reflect the underlying value of EDP for the shareholders. And then on the other hand, we also found that the regulatory context was actually quite challenging, requiring on the one hand changes to the bylaws of EDP, and on the other several regulatory authorizations in the EU and also in the USA. So in the end, EDP's decision was to not back the offer and recommend. We couldn't, and in the end, we couldn't recommend shareholders to accept the offer. Well, I wouldn't say that this was a hostile or friendly takeover. I think that in the end, as was our job and our duty, we did all we could to collaborate with CTG's representatives. We engaged in several conversations, trying to understand their plans, trying to understand their vision for the company and for the stakeholders. And we obviously provided all the assistance that they required in identifying, all the approvals necessary and all that was actually required to go through with the transaction. So in the end, I wouldn't categorize it as neither hostile or friendly, but the fact is that we analyzed very thoroughly the conditions of the offer, and we couldn't, and given those, we couldn't back the offer.
Of course. I think it's a very peculiar situation, right? And it really shows that it's not always black and white in this type of area, friendly or hostile. Or okay, thank you very much for the answer. Now, a really core question that I have. In practice, how do you decide between acquiring a new firm versus expanding or developing the parent firm? Basically, what I'm asking is inorganic growth versus organic growth. And what would you say are the biggest advantages and disadvantages of mergers and acquisitions or inorganic growth as a whole?
Well, I had this teacher in college. He used to say that when we were asked a question, to the right answer was always to stay on the fence, and answering it depends. Well, in this case, it actually is. It really depends. It depends on the scope of your operations. It also depends on what the strategy is, on what the outcome expected is. And therefore, companies can opt between different strategies depending on what the ultimate goal is. I think that at EDP, the accurate strategy, as I mentioned, will obviously depend on the specific move that the company wishes to make, whether to enter new markets, whether to explore a new technology, whether to create optionality for an up and coming technology or solution to scale up a given branch of the company, a given operational model, among many others. This is why it's critical to have a powerful equity story, to have a powerful and very clear path to go ahead. And M&A is obviously a very powerful tool, and the inorganic growth is obviously a very powerful tool to accelerate to accelerate growth, and usually faster than pursuing the organic avenue. It's also quite powerful to reposition the company, for instance, towards a given strategy or other given strategy. Example, selling non-strategic assets and replacing them with others that would make more sense to consolidate and really focus the company towards a strategy. And as such, I mean, M&A is in fact quite critical. And as I mentioned in the beginning, it has been so far a critical strategy of EDP that has ultimately led us to what we are and to where we are today. EDP has over time relied on several different approaches over time to address these specific topics that I raised, either to enter new markets, to reposition the company, to enter new technologies, and many of them are quite different from one another. So, and I can actually provide you with some examples.
Go ahead.
In 2007, EDP acquired Horizon, which was a renewables platform in Texas. We obviously anticipated this the renewables trend in the utility space, and we were able to enter the US with a leading position, acquiring local knowledge, local teams, and we were able to quickly and rapidly scale up operations. So this was an inorganic strategy to really make us scale up operations quite rapidly. On the other hand, for instance, we recently developed a 50-50 joint venture with Engie, creating a company called Ocean Winds to develop this specific technology, which is wind offshore, which traditionally requires a very significant investment amounts and have shorter time to market. By promoting this really specific entry strategy, we were actually sharing knowledge with Engie, which is another utility major, but we were also de-risking quite significantly our investments in this technology. So this was another interesting strategy. Another example, to ramp up solar DG self-consumption solutions. We recently, through EDP's retail arm, we acquired a company in the Italian market called Enertel, and obviously we had access to the target's local sales force and experienced team in solar DG. We also pursue organic avenues, obviously, namely in the deployment of renewable capacity in EDP's core markets, either in Europe or nowadays in the US as well. And it's where obviously we have a lot of experience. And then obviously the example that we were discussing earlier today, which is the Viesgo acquisition, which was a unique deal for us that allowed us to merge our operations in north of Spain, namely in distribution, and extract quite significant and meaningful synergies. So as I mentioned, I mean, quite different strategies for different purposes as well.
For sure. I think that it really shows how the answer to this question is really depends, right?
Exactly.
So as you see with EDP, it really is amazing how many different strategies, and depending on the segment or what you want to do with the company and how you want to evolve it, it's really interesting to see all these different strategies, and that of course, a department of investment isn't always just M&A, and it's not the only option, of course.
There's a quite strategic angle behind it as well. That has to do with what exactly do I aim to achieve, and what's the most adequate strategy to achieve it. Is it through organic growth? Is it inorganic? Is it a partnership? So that's a quite strategic question that we need to ask ourselves quite frequently, and then obviously we need to thoroughly execute it as well.
Yeah, and an important part as well is the shareholders, right? You really have to present the value to the shareholders and show them how you're going to add value to the company, right? I imagine that's very important.
It is, and it's. I'm glad that you raised this topic. Well, at TDP, this is a key concern, of ours. Our operations usually go through a very intense internal approval process, which in the end aims at providing comfort to our shareholders, and obviously the ultimate goal is always to add value and to be value accretive to the owners of the company, to the shareholders. So in the end, that's also a quite important part of the equation that you raised there.
Of course. I think it's very cool that EP obviously has such a big focus on adding value for the shareholders, but also has the values such as sustainability so present in mind. It's really a combo that I appreciate a lot. Okay, so finally, a little bit more of an opinion question about the market. Do you think it's likely that we will witness a new merger and acquisition wave in the near future, like 1 or 2 years? And what leads you to believe so?
Again, quite tricky question to answer. I think there's no silver bullet, but I can try and address some of the topics that I think are relevant in this specific discussion. As you know, we've had so far a decade of a bull run when it comes to M&A activity, which slowed down quite sharply earlier this year as the pandemic appeared. Well, if on the one hand, and I think it's quite consensual that there are some trends that have been in place for the past couple of years that have been accelerated over the last few months, namely the digitalization, ESG related issues, the energy transition as well, and I think those are trends that could be uplifted in a new wave of M&A. I think there are also several tailwinds that could support robust M&A activity going forward. I think that despite concerns over an increase or potential increase in interest rate following the several packages that the US has been putting forward recently, I think that the market actually seems supportive of this transaction, namely with historically low cost of capital. I think that in a sense and in a way, geopolitical conditions seem to be progressively here is quite important, have been progressively stabilizing, namely with Brexit and the UK New Deal. Also in the US with the new administration, and this obviously could foster and incentivize cross-border transactions. Then I think that with the vaccination rapidly accelerating as well all over the world, I think that the COVID impacted sectors may also improve, providing also a clearer visibility over near-term results. And as such, I think that could also trigger a significant wave of M&A transactions, coupled with other companies that are actually uplifting on the pandemic. And as the pandemic lingers, they are actually consolidating their own positions in the market and investing in scale. And as such, I mean, as I mentioned in the beginning, I think there's no silver bullet. There's actually no silver bullet to answer this question. But I think, and obviously, it's still, I think it's still quite uncertain what will be the outcome of the pandemic, and when exactly, and what could we expect going forward, and when could we expect an economic recovery. But if I had to identify 5 or 6 trends that could actually contribute to an M&A, to a new M&A wave in the future, I think these will be those.
Of course, I think that was a very, very interesting answer, especially for our young investors, of course. Since you do touch on a lot of points that might incentivize this type of movement in the market, while it's not certain, of course, the market isn't predictable, and so are the times we live in. But I think it's a great base to start at. Okay, Diogo, thank you so much for being here with us. I think this was a great insight on how a mergers and acquisitions department and team works in a firm that isn't a financial institution, and that mainly expects or wants to grow its core business and maybe expand a little bit as well on other types of businesses. I think it was very insightful, and I hope we added value to our viewers as well. Thank you so much, Diogo.
Yes. Thank you, João, and feel free to reach out whenever you need anything from our side at DP.
Will do. Thank you.